Okay, so I'm just gonna go ahead and get started. Sarah Dotson, Prosper Insurance. You guys are used to seeing me doing these courses once a month. I know last month my colleague Brian Tinney did it for the property owners, insurance, but I'm back and doing it today, and we're going to be covering the different types of property insurance. So, there's your homeowner's insurance, which most of you guys are super familiar with. Everybody that owns a home or rents a home, needs to have homeowner's insurance, but there's a bunch of a few different types of property insurance as well. So I'm going to touch on a few different of those coverages and policies today. And just a little bit of a reminder and a quick little plug for Prosper Insurance. We do cover more than just homeowners insurance. All of these policies I'm going to be touching on today, we can provide coverage for. We also do auto insurance, umbrella insurance, and flood insurance as well. So this is super informal. So if you have any questions, please feel free to interrupt me, and I will be happy to take your question. Because I am sharing my screen, it's hard for me to see if there's anything in the chat. So if you don't want to, if you don't mind, just ask me, or we can do questions and answers later. Excuse me, because it is hard to monitor the chat. So I'm gonna jump right into it here with condominium insurance, which also I know you all are probably pretty familiar with condominium insurance. As a realtor, you have to deal with it with your buyers, maybe your listers, maybe even yourself. So, with the condominium insurance, the responsibility for coverage is typically split between the association and the individual unit owners, resulting in two different policies. So you have the master policy, and then you have the condominium unit owners policy, which is also known as an HO6. So the master policy is going to provide property damage and liability coverage for a residential building and its common areas. So examples include condo buildings, co-op buildings, and some home communities that have single family condos within them. And you've seen that, or maybe when we've seen that, excuse me, the pollen is really killing me. And different newer neighborhoods throughout the area where it's single family homes, but they're listed as condos because there is an association that carries master policies on the home. So what's included in a master's policy is external coverage of the building. So that includes the roof and external walls, as well as common area coverage. So that is going to include hallways, elevators, stairs, and recreational areas. And the amount of coverage that's provided for these areas, it's going to vary from policy to policy and carrier to carrier. Some examples of incidents that might be covered by a master policy in common areas could be, let's say, a fire breaks out in a party room that leads to injuries of the attendees that are maybe at that party, or causes property damage. So that's an example of liability and property damage coverage rolled into one in that instance. Let's say a tornado blows through and knocks down storage units. That's considered, a common area. Or a bike could be stolen from a storage room or bike storage room as well, where the unit owners store their bikes. That could fall under that coverage as well. And then as far as the deductible and how it works. You know, it's pretty clear who pays the premiums for the master policy. That is the association. However, it can be less clear who pays the deductible in the event of property damage. So in most cases, who pays for the deductible depends on how the damage was caused and what exactly was damaged. So like 3 of the most common outcomes are, you know, you as a unit owner may be responsible for the entire deductible. So if the property damage only affects your unit, and if the property damage may have been your fault, you may be asked to pay for the entire deductible for that insurance claim. Likewise, if only some of the units were damaged, then you split the deductible among the affected, you know, unit owners. You may be responsible for part of the deductible if a common area of the property was damaged, maybe like the pool, a garage, or like an outdoor space. The deductible may also be split among the unit owners. This may also be the case if only some units are damaged, but the damage was not due to negligence. And then the condo association may pay the deductible, and they may also collect money for insurance deductibles as part of their regular fees that, you know, the condo fees that they have, while others may have like a slush fund that can be used to cover the cost of a deductible. So this is something you're just gonna want to, you know, look for in the condo docs or ask your condo association if like such a fund exists. So that was the master policy. So then a condo unit owner's policy, that's also known as an HO6, and it's going to provide coverage for the owner of an individual condo unit or townhouse. So they own the interior, so the inside of the unit, and therefore will need coverage for the portion of the unit that they are responsible for insuring, along with personal property coverage. So all of their personal belongings that they bring into the home, and liability protection for the interior of the unit. Like I said, it's referred to as an HO6 policy, which is what the lender will require a buyer to have in place at the time of closing. And again, coverage includes the unit itself, walls and fixtures, personal property, liability, loss of use, and loss assessment. Loss assessment is really important, and I'm gonna get to the importance of loss assessment in a moment. As far as how claims are handled between unit owners, you know, whether or not your insurance company can subrogate against another unit owner or the condo association really depends on 2 things. So the state law and like your condo bylaws and association. So certain state laws or certain condo declarations require a mutual waiver of subrogation rights against another unit owner and the condo association. So it, depending on the situation, it can be handled differently. And then as far as loss assessment coverage, loss assessment is optional, but highly recommended. And the reason for that is the loss assessment covers situation in which like a unit owner in a condo is financially responsible for a shared loss, so long as the loss was caused by a covered peril, such as a fire, storm, water damage, etc. So let's say there was a fire damage to the lobby of your condo building, and it ends up costing the association more than they have set aside. Like if they have like that slush fund, then the loss assessment coverage will pay for whatever the individual share the unit owner must contribute to make up the difference. So the condo association can assess each unit owner, a specific amount of money to make up for the difference that they're lacking for that covered damage. It could be thousands of dollars, which you might not have, sitting in your bank account. So you can have this coverage added to your policy. So if you're assessed, let's say anywhere from $5,000 to $10,000, then you can file a claim so long as the assessment is due to a covered loss. Then the insurance company will make up the difference for you, and you're not having to pay out of pocket. Do I have any questions so far? Okay. Also, in regards to condo insurance coverage, there is also condo flood insurance, which, like your homeowner's insurance policy, your condo insurance policy is not going to cover flood. I mean, and we're not talking about a pipe bursting and water going everywhere. We're talking about, rising water in order for FEMA to, or their definition of a flood means any sort of rising water. So FEMA created a special flood insurance policy for residential condo buildings. It's called the RCBAP, which stands for Residential Condominium Building Association Policy. So it's going to cover the entire building under one policy, one deductible for the building, and it provides replacement cost coverage for the building, higher limits, which I'll touch on in a minute. And the coverage extends to, not just the building, but the common areas as well, similar to the master condo insurance policy. And it's gonna extend to the units, which include like the drywall, the cabinets, the ceilings, the fixtures, appliances, and flooring. That is different than the master condo association policy, where they're just like, the drywall's out exterior, but the flood insurance policy will extend to the interior of the condo. The RCBAP, so the Residential Condominium Building Association policy, allows for the condo association to purchase coverage for up to $250,000 per unit, not exceeding the replacement cost. So let's just say you have a 2-unit condo, they can purchase a policy up to $500,000 for the building limit. So on a single family home for flood insurance, the highest amount of coverage you can get through FEMA is $250,000. So what they're saying is per unit, you can get up to $250,000. So a 10-unit condo can purchase up to $2,500,000 of coverage, because there's 10 units in the building, and each qualify for $250,000 of building coverage. And then as far as a unit owner, they can purchase an individual policy that will cover their personal belongings within the unit. So like their furniture, their clothes, basically anything that isn't nailed down. And if they took their condo and like turned it upside down and shook it, anything that fell out, that's what they would then have flood coverage for as it relates to a condo. Any questions on the flood insurance portion of that? Okay, and then 2-unit condo insurance. So all condominium owners associations establish rules or bylaws that govern the complex. So these bylaws outline the requirements for condo association insurance coverage, the specific requirements for the coverages, such as deductible coverage limits and types of coverage that the association must purchase. So that's like how they can identify like what type of insurance they're going to need is just refer back to those bylaws. The general liability covers for bodily injury or property damage arising out of the association's premises or operations, and every association is going to need this policy and will have it. And then, you know, the ramifications of insuring these these condo units incorrectly. I mean, a couple different things could happen. The policy could be canceled or non-renewed when it comes up for renewal. If there is a claim and, you know, it's determined that these condos are not insured appropriately, it could result in a claim being denied. And no one wants that at all. Landlord insurance. So there are differences between a homeowner's insurance policy and a landlord insurance policy. So the homeowner's insurance policy, that's going to cover the entire dwelling, like the entire structure, plus, you know, all the personal belongings inside. Landlord insurance coverage provides like property owners renting out one or more of their residential homes or apartments to another person. And you're going to get coverage due to the coverage to the dwelling due to fire, storm, theft, vandalism, even tenant damage. So the liability insurance is going to protect you against any liability claims and lawsuits that could happen. So whether it's a tenant, a visitor, or even a trespasser, they are insured on your rental property in case, you know, they get hurt. You know, you could find yourself in a legal situation. So that's why it's really important for you to have it. It will help you cover the costs associated with any bodily injury claims that happen on your property due to, you know, to a visitor, the tenant, or even a trespasser, like I just mentioned. The policy will also include loss of income or loss of rents. And this will help compensate you for lost income in the event that a rental property becomes uninhabitable due to a covered loss. So let's say that there's a fire in your rental property that you're renting out, and the renter, the tenant that's in there, needs to go live somewhere else, like in a hotel or with another family member while the home is under renovation and being repaired. The loss of income coverage or rental reimbursement will prevent you from losing income that you could have collected in rent while the tenant is, you know, being somewhere else and the rental property is under renovation. And the DP3 form, that's just the form that the policy is written on. That's like the insurance vernacular for that type of policies. So a DP3. And the importance, again, of insuring a landlord policy correctly. If you are renting out a property and have a homeowner's insurance policy instead of this landlord policy, again, if you file a claim, it could result in the claim being denied. If the insurance company finds out, you know, that this is what you're doing, you're not actually living in the property, instead you're renting it out to someone, it could be grounds for cancellation of the policy and or non-renewal when the policy does come up for renewing. Any questions about this? Any landlords listening that have any, you know, experiences with landlord insurance or anything they want to share? Okay, I will keep going. Okay, so another type of insurance that is pretty common out there, and we do quite a bit of quite a bit of policies for, is the renovation builder's risk insurance. So a builder's risk insurance is a specialized type of property insurance that helps protect buildings that are under construction. So builder's risk insurance helps protect against construction projects from property damage due to fire, lightning, hail, theft, and even vandalism. So if you're planning to renovate or build an addition on an existing structure, as far as like the occupied renovation goes, you really need to let your insurance company know first. They will double check to make sure, one, that you're adequately covered throughout the process. Your needs will vary depending on the scope of the remodel and whether or not the residence will be occupied throughout the project. And many insurance companies offer an under construction like endorsement that you can add add on to your homeowner's insurance policy that will provide coverage for any like renovation related injury or accidents. So that's anytime you're going to be doing some, and I'm not talking like painting, ripping up the floors. We're talking about like, you know, renovation, maybe knocking down some walls, moving, you know, some stuff around. That's when you're going to want to call and find out if, you know, you're covered for this, or if there's an endorsement that you could add to the policy to be covered. Unoccupied renovation, that's going to fall also under this builder's risk insurance. And it's going to be like a separate type of policy. It's not going to be covered under your homeowner's insurance. You will need this builder's risk policy. And let's see, what if you're a client that has a mortgage on a renovation property. Let's say you're purchasing a home and the plan is to do some major type of renovation, and then you're going to live in your home. It's going to depend on the lender like products and what they're going to ask for. If you're closing on the home, they're probably going to require a 12-month insurance policy. But if they're not going to be moving into the home right away, and they're going to be doing a renovation policy, like doing renovation on the home before moving in, but they're closing, what they're going to have to do is get like a builder's risk policy that's put into effect for 12 months, the full year, to satisfy the lender, because they need to see that there is a policy in place for a full year. However, once the renovations are complete, let's say it only takes like 3 to 6 months, you can then cancel that builder's risk insurance policy, and they will refund you any unearned premium. Sometimes it's less, like 25% or 50%, depending on the insurance company. And then you can get a regular homeowner's insurance policy put in place once the renovations are complete. And then the insurance company, what we would do is send the new policy over to the lender to make sure that, you know, they know that you are still covered, but you have a regular homeowner's insurance policy now. And a lot of times the premium is going to be less expensive, because homes that are undergoing renovation, especially if they are unoccupied, are at higher risk for some sort of loss. So that's why the premiums are a little bit higher. Do I have a question? I saw something pop up in a chat. Will that insurance cover any accident on the workers? No, that's why they're going to have like workman's comp. and then their company having like a general liability coverage as well. So this is only coverage for the, the liability, the premises, and the rent, the property as well. Great question. That is a really great question. And then another type of policy that is out there is vacant property / vacant land insurance. So unoccupied and vacant homes present, and I just mentioned this a moment ago, greater insurance risk than those occupied homes for many reasons. Because of slower emergency response times, especially if the property is vacant, maybe there's like a pipe burst, and let's say it's been a pipe burst or there's a pipe leak and it's been leaking for like a week and no one's been there. It's going to cause more damage than if you'd been there and you caught the pipe burst or the pipe leak right away. There's also an increased probability of someone breaking in to the home or causing vandalism since it is unoccupied. So vacant property insurance is designed to provide protection from damage or loss to a property that is uninhabited. And typical homeowners insurance policies will not cover for these like fire, liability, vandalism, and other types of claims on a vacant property. For example, if you leave your home vacant for a few months and there is a fire, the vacant home insurance, would provide coverage where your standard home insurance policy wouldn't. And typically, if a property has been or is going to be vacant for more than 30 days, you're going to want to check with your homeowner's insurance policy and see if there's like some sort of endorsement that you could be added to your policy. Otherwise, you would need to purchase a separate policy. I see a question coming in, I think. Does the insurance cover squatters? That is a really great question that I am going to write down and ask and find out. Actually, I might be able to do it during this. I don't know if it covers squatters or not. That is a really great question. And I hear that squatters, are becoming more and more prevalent in these vacant homes. So Christine, you asked me that. I see. I'm gonna check on that and get back to you. Okay. So again, as far as the vacant property insurance, thank you. You're welcome. A separate policy can be purchased, or like I said, depending on the carrier, an endorsement can be added to your homeowner's insurance policy. If it's purchased as a separate policy though, then you won't need your standard homeowner's insurance policy. So you can just go ahead and cancel that policy. So vacant land insurance is basically a form of liability insurance, and it exists to protect you in case, well, I guess this kind of answers the question. I guess a squatter could be a trespasser, but it's going to protect you in case anyone gets hurt on your property. So it's going to cover medical costs as well as any type of legal fees. You're not legally required to have vacant land insurance, but anything, that protects you and your investment from litigation or medical expenses is a good idea. I'm still going to check on that squatter thing though, but as far as like the vacant land insurance, that's going to protect you in case someone does get hurt on your property. So there's no land, there's no structure on this now vacant land. Let's say you own a bunch of land. I know Thomasina, you were talking about you have land out in West Virginia. If you own a bunch of like land without structures, that's when you can get vacant land insurance. And you know, what does vacant land insurance cover? It covers medical bills, pain and suffering, death benefits, legal costs, you know, in case someone is like trespassing on your property, gets hurt. What is not covered, it does not financially protect you against any injuries that were purposely inflicted, nor will it protect you if you're you or your spouse or your dependents are hurt. And you're going to want to have this type of coverage on your vacant land if, you know, if someone is using it, you know, constantly, if maybe you're allowing people to hunt on your property, maybe they're coming there to fish, ride ATVs, people are hiking on it. So if you have vacant land and it's being used on a pretty regular basis, that's when you're gonna want to have coverage, again, just to protect yourself. It looks like I've got another question coming in. I was told that if you have it posted no trespassing, that they can't come after you. I'm gonna write that question down too. My assumption is that that probably is true. If you have, you know, no trespassing, then they can't sue you if they're on your property and get hurt because, you know, you're telling them they can't. This is good for you to have if you are allowing people to be on your property. But I think that was still you, Christine. So I wrote down squatters and trespassing, and we'll check on both of those for you and get back to you. Again, another good question. So yeah, as far as vacant land is covered, that's why that's when you will want to have that type of policy. And again, no one's gonna require you to get vacant land insurance. It's just something for you to consider if you do have land and people will be, you know, coming in and out of it on a pretty, you know, regularly basis. And that's it, guys. It was a pretty short presentation, all pretty straightforward. Any other questions? Thank you to everyone who signed on today. I see we had some people join while I was going through the presentation. Oh, thank you, Christine. You're sweet. All right. Well, you guys have a wonderful rest of your day, and I look forward to seeing y'all soon. And my phone number is right here in my email. That is my direct line. Feel free to text me or email me or call me if you have any questions. Christine, I wrote these questions down and I will get back to you with the answers, okay? Oh, Letitia, thank you. I appreciate your time too. Y'all are so sweet. All right, y'all, have a wonderful day. Thank you.